There is a tectonic shift happening right now deep inside the architecture of global finance. It's a transition that is unfolding silently, buried in the strategic roadmaps of the world's largest financial institutions. For years, the system has operated on rails built a century ago, slow, inefficient, and closed. But a plan to replace that entire system is not just being discussed, it's being executed. And the architect is one of Wall Street's own most visible figures, Tom Lee. This isn't a story about buying a cryptocurrency. This is about a career-defining bet to build the rails of a new financial world. Lee is putting his reputation on the line. He's betting on a single powerful idea that the world's financial plumbing is fundamentally broken. It is a system that is reaching its breaking point, unable to keep up with the demands of a digital age. He calls it the tokenization supercycle, and he believes one platform, Ethereum, will be at the center of it all. The $12 billion bet isn't a single check. It's a metaphor for the colossal shift measured in hundreds of trillions of dollars. It is a shift that is already well underway, moving silently through the halls of global power. The momentum is building, and the old guard is beginning to notice. Let's look at why. The structural vulnerability of the old world. To understand the sheer scale of this vision, you first have to understand the core structural vulnerability of the old world. The entire financial system runs on shockingly archaic technology. For decades, settlement took 3 full business days. They called this T+3, a relic of a time before the internet, before instant communication. In 2017, this was upgraded to T+2. More recently, in May of 2024, the United States, Canada, and Mexico moved to a T+1 settlement cycle. Especially during periods of high volatility when the system's weaknesses are most exposed and most dangerous. The issue isn't just speed, it's the architecture itself. It's a fragmented system of siloed databases and manual processes. Layers of intermediaries create friction and cost, slowing down the global economy and adding unnecessary risk. A system where access to entire asset classes, fine art, private credit, has been restricted to the ultra-wealthy. For years, the best opportunities have been gated, available only to those who already have the most capital. Fractions of commercial real estate have been locked away from the average investor for decades. That's about to change. A system constrained by a 9:30 to 4 o'clock, 5 days a week, as if the global economy simply stops overnight. This is what Lee argues is obsolete. Before we dive into the solution, I want to hear from you. Is the current system broken or just slow? Let me know in the comments below. The solution, the tokenization supercycle. So, what is tokenization? It is the process of creating a digital certificate of ownership, a token of a real-world asset on a blockchain. The token inherits the legal rights and value, but by existing on a blockchain, it gains a set of powerful new properties. First, fractional ownership. Because these tokens are smart contracts, they can be programmed with automated rules. Imagine a bond that automatically pays interest to token holders. In March 2024, BlackRock launched its first tokenized fund on a public blockchain, the BlackRock USD Institutional Digital Liquidity Fund. When BlackRock wanted to create a modern, 24/7 financial product, they did not build a new proprietary system. They chose a public, open-source blockchain, Ethereum. The migration has begun, and the destination is clear. The world is watching. Why Ethereum? Why Ethereum? Deconstructing the bet? So, with thousands of cryptocurrencies out there, why is Wall Street focused so intently on Ethereum? The answer is in the design. Bitcoin was designed to be a decentralized, secure form of money, digital gold. Its code is intentionally simple to ensure maximum security for that one use case. This makes it an incredible store of value, but not a flexible platform for building complex financial applications or products. Ethereum, on the other hand, was built to be a world computer. It allows developers to build decentralized applications using smart contracts. Its programming language is flexible enough to run almost any code imaginable. This is the foundation Wall Street needs. You cannot build a product as complex as BlackRock's Buidl fund on Bitcoin's base layer. On Ethereum, it is becoming the standard. This is Lee's thesis. While Bitcoin is the digital gold of the crypto economy, Ethereum is becoming the financial settlement layer, the rails for the new world. A foundation built for speed, transparency, and global accessibility, a foundation that is already proving its worth. Lee has made forecasts of Bitcoin reaching $250,000. For Ethereum, his targets range as high as $22,000 long-term. That's a massive bet. However, there is a critical divergence. Reports suggested Fundstrat's internal research warned of potential short-term corrections. Why the split? So how can both be true? This highlights the difference between short-term market volatility and a long-term structural thesis. Analysts look at the now. Lee looks at the decade. Lee's overarching bet is on the decade-long story of tokenization. He sees dips as buying opportunities. Provided fundamentals remain strong, context is everything. This adoption is no longer a forecast, it is reality. By 2025, over 50 major non-crypto enterprises were actively building on Ethereum, companies like PayPal and Deutsche Bank. In 2024 alone, firms and ETFs acquired a staggering $19 billion worth of Ethereum. This is mainstream capital allocation, not retail speculation. This creates a powerful feedback loop. Institutional adoption drives development, which enhances security, making it even more attractive for others. It becomes a flywheel. This is the ultimate validation of Lee's thesis. His bet is on the irreversible economic incentives of the world's most powerful players. The game has changed. So, is Tom Lee truly making a $12 billion bet? Not with a single check. The reality is much bigger. The narrative isn't about one man's massive crypto treasury. It's about a fundamental rewiring of the global financial system onto blockchain rails. A total migration of value. Tom Lee is looking past the daily price charts and at the foundational infrastructure being built. The move from T+2 to T+1 was just repaving a road. This is different. Tokenization is like building a teleportation device. The signal has been broadcast. The world is changing faster than most realize. The rails are set. The only question is whether you will adjust your positioning before the rest of the market wakes up to the reality that is unfolding. Don't get left behind. I'm Josh. Stay sharp.